Going live. Things should be good. Everyone able to hear me? I don't think I had everything started there a minute ago. I think everything should be up and running now. 3 viewers. Okay, we're starting to get people in. Okay, not looking too shabby. Yeah, I know I can't hear anyone coming straight back to me or anything, but I think things are going okay. Just check for any messages here. Think there should be anything. Yeah, I think everything should be okay. It says we have 2 people in here now, so actually I'll get it up on my phone, make sure everything's going good, so I'm not sitting here for half an hour or 45 minutes chatting away to myself. Let's see. X91Investing. So we have the live, 2 people watching. Right, Jeff. Things seem to be going well. Okay, we have 1 concurrent viewer now. We're losing people. Right. Okay. So I think, well, whoever's there is there. Whoever comes in. The show must go on, I suppose. So basically, anyone that's not in is definitely going to miss out, because we're going to really. Last week was a bit of was very, very general, but now we're really going to dive into things here now. So yeah, as you can see here, we have the TradingView software open. If you saw my video there that I put up yesterday, we went very much in depth into it was quite general actually when it came to the forex markets, and that's going to be pretty much what we're going to be looking at today. So we'll open up a chart just so we have something on the screen, and I'll just chat away for a minute. This is FinViz as well. Another very, very, this is more stock oriented, but it's definitely a very, very, very powerful tool in your arsenal from a trading point of view. But yeah, right, we'll open up the Euro US dollar chart. I'm going to have drawings on this, so we will clear the chart and we will get up a new one, so we'll go new chart layout. So this is going to be completely fresh. We're going to call this Sunday PMA, because this is going to be the template. So if anyone's new to TradingView, which I could understand a lot of people watching this might be, so up here you have your layouts. So basically when it comes to layouts, you can set up loads and loads of different layouts. So like, I don't really use layouts because I kind of just stick to it's only my analysis. In a firm, loads of people working on the same machine maybe might have different layouts that they might use. Like what I've used it for in the past was a kind of a one for keeping the charts nice and clean. Like as you can see here, if I go down to my color theme, I have a blacked out no bias. So if I turn on that, it's actually kind of set up for the light theme. So this might completely blow this is kind of burning my eyes now at the moment. But if I go to the blackout color theme, it blacks out all the candles basically. So I'm not biased by black and green candles, or red and green candles, sorry. So what we're looking at, I'm just using a little pen stylus here because we're going to be actually drawing on screen, because this is going to be a bit more in depth. What's happening here now, if you open your chart and it starts jumping around like this, see the way price is kind of going the camera is adjusting to the price. What you can do is you can right click on the bar here, so where all the price levels are. Just go here and you just go auto fits data to screen, check that off. So now you have full control over where your data goes. And I'm sorry if this is kind of scratchy. The tip on the pen is actually fairly worn, and I don't have any replacements, and it might sound a little bit because the microphone's right here in front of me, so it might be a little bit scratchy. So I'll sort that out for next week. But so look, we live and we learn from previous experiences. Just once you don't make the same mistake over and over again. So basically what we're looking at here is the black candlesticks. I use this to completely have no bias over me from a bullish and bearish point of view, and I'm literally only analysing the candles themselves. So when we look at, say we'll just take this area just here, right? So this is the Euro USD chart. So this is trading the euro against the US dollar. So if we have €1, how many US dollars is that worth? And it's basically €1 is equal to €1 or $1.20. It's practically just roughly, without that 69.9 on the back of it, just €1.20, just about close to €1. It's about €1.20 and a half ish. So what we're talking about is we're at a level now where price is. So what we're talking, like what we have here, so if we get this trend line, so what I'm doing now is I'm just going to click, and we have full control over where this line goes. If we want to do an uptrend like we would here or whatever, what I sometimes do is I hold shift, and when I drag the pen across the screen, you can do this with the mouse. I'm only going to be writing a good bit in this live stream anyway, so I'm just going to go like that. So that what we've drawn right here is a support level, right? So, but I held shift to draw it as a flat line, because the trend line, see, like you have the horizontal line. So if I pop in a horizontal line, say at this high up here, so I put in a horizontal line up there, but if I go back in time, that line is thrown the whole way back across the chart. And sometimes you don't want that. Sometimes, like, this is only a key level to this point in time. This is a 23.45 1.2345 price level. But in history, if we go and knock this back to if we go to the monthly charts, so we can see price over the last couple of years, like, this hasn't occurred since 2018. This level hasn't been hit. It's a very, very key price level, obviously, because it's, you know, well, it got up to actually to about the 2026. But I'm going to show you the horizontal ray. So if I hold control, it snaps to the highs, the opens and the closes of candles. So it snaps to the opens, highs, lows, and closes of the candles. The OHLC, as you can see, open, high, low, and close. So if we quickly we can open up the Microsoft whiteboard. So if we go Ink Workspace, open this, we can do a full screen snip. So now I can actually draw on this now. So I can take my pen, right? So when we have these, like, price gets up to these levels, these are key resistance. This is key resistance at this level here. Like, we're getting to that kind of time. And as we can see in the last month, we have this candle that's kind of I'm confusing myself a little bit here now. Just give me 1 second to recuperate. So when we have this price level, right, this is stringing back into history, just going back to what I was actually talking about. This is going back in history, like, forever, as long as the chart is actually available. We have this price level, and with the price level, like, it was reacted to here, and here. So it's obviously a key level of either support or resistance. So over here, it acted as support, but up here, it acted as resistance, and the same over here. So when price gets to a point and it rejects, it's known as resistance, right? So when it, or support or resistance, and you can have SR flips. So you have a SR flip, which is basically when the price flips and flaps around at the various levels. So you have your support and resistance levels. So you would have had an SR flip in this location, because the price, obviously, this is over the course of, say, 2 years. In this small range here, because we're actually looking at a monthly chart. So basically we're looking at, like, the price came down to this level, rejected off it, but then when we were looking at this the next time, we wouldn't be looking at a monthly chart per se on a foreign exchange pair. They can be traded long term, and there can be long term investments put into the forex market, but long term would be more associated with stocks rather than the foreign exchange market. But what we would have been expecting here to see, especially at this candle in this month, we would have been expecting to see a rejection in the next month. We like, back, say, in this kind of time, this was before, well, I kind of started looking at the markets in this around 2015. That's when I first took my first kind of interest into 16, 17, and now we are today here in 2021. So we're looking at, like, I wasn't really invested in the markets back when this was happening, so I wouldn't have actually known what would have been going on around here, nor would I have had much of a any idea. I was really only getting into it back then. So we're looking at So looking at this, say from a live point of view, I would have been expecting to see a rejection from this support line, from this support here, because price previously broke through but actually shot up through it. But looking at the previous, there's a low here that carried along, and we can see here the price actually got to that extreme low. I drew this line off of recent price action. So when it comes to it, you go for recency and then you go for the relevancy of the actual thing. So it's like this would be more relevant than this one would be. Seeing as they're both the same, they're both relevant pieces of information. This one is more recent, so it actually means more. So we're looking at this. This is a resistance point, and this would have been. We would have expected this to act as support, because it previously acted as support. And if we actually dismiss this and we actually have another small little look back, okay, we should have thrown the chart back another little bit, because we can see now we should have actually done this from the get-go. If we catch this, the TradingView got a massive update there this week, and I'm still only coming to grips with the way these things are laid out. I'm using this with a good long time, and I'm not used to this looking the way the whole toolbar thing is after changing. You used to have to go into, all the colors are different, all the thicknesses of lines, so you're actually anyone new will be just learning from the modern way of doing things rather than the way I would have been used to. So if we actually go off that, right, so if we take our full screen snip again, so we have a lot of data here, like off of, if I was drawing these, like I drew that off a recent high on a daily chart. There's 28, 30 days to a monthly chart or a monthly candle. So there's we drew that off of one little piece of information. But look at what that high that I actually just picked because we were looking at the chart. Look what that means. Like we have rejection here, rejection here, rejection here. So what would we have expected here? We were expecting a rejection to the upside. But what happened? It broke through. And if, as a trader, you're looking at this, you're looking here. So if I zoom in, we actually might be able to get a good view of what's going on here. So what is it? Control to pan around. We can see, if we were looking at this from a live trading point of view, you're looking at this candle. So you see this downtrend is losing strength. Well, from the trained eye, you would notice instantly that this was losing strength after this candle. In that zone, it was losing strength. The downtrend was losing strength. So that was even kind of telling you this could actually, this is looking like a reversal to the upside. But what happened? It broke through, and basically what this candle was nearly a bullish engulfing or a bearish engulfing candle. So bearish engulfing, if you have, and actually draw them with accurate coloring, if we have a candle, a green candle, like, that's not a great representation. If we have a green candle like this, and so the price, so that's a green candle, and the price was coming, say the price was rising, and we have, like, these are strong green candles. There's very little bearish influence on these candles. But the next candle that comes is a red candle, but the red candle wicked above that wick level, broke down, and completely engulfed that candle, right? So if I go back to, say, if I take a purple, that red candle, that bearish candle, is after fully engulfing that green candle. So that's an entry reason for me to get into a trade, because this is showing huge selling pressure coming out of an uptrend. Like a bullish rally, or a bullish rally is what we'd call this, is when a series of green candles, one after another, opening and closing, strong bodied, smallish wicks. You can have big wicks. Like if you see a candle that looks like this with a small body, a small wick here, but a huge big long tail on it here, there was a lot of bullish influence in that candle, but it quickly lost power and fell back down and closed here, where it could have closed up here and showed a really, really strong bullish candle. But it didn't. It shot up, but the sellers caught onto the bulls and pulled them back down. So I'll just do a quick recap on last week in case you weren't here. So if you're talking about a bull, right? A bull, when they attack, or when they when they do a if they were to attack, they will drop their head and attack in a motion with their head lifting up the way, and that's why they say a bullish move goes up the way. But then if you go, and actually I'll do it I was going to draw on an actual bear, but if you're thinking about a bear, right, so God, it might look a little bit like a cat, but if we show a bear will swipe with his hands kind of in a downward motion. You wouldn't see a bear kind of, like they're heavy animals. They wouldn't swipe up because they might fall back and lose balance. So you think of a bear attacking from a top down kind of a way. So when you think about it, the bulls, when they attack, they go up, and the bears, they attack, they go down. It's not the best analogy, but it's the way the markets are explained, and they've always been explained that way. It's like that way for a reason. We'll put it that way because it wouldn't stand to reason today if it didn't make somewhat of sense, and it does make sense. There's no two ways about it. But back to the markets anyway. So this would be considered a bullish rally, right? A rally just means, like in tennis, is a consecutive over and back. Same thing with the markets. You kind of have to think of it more in a rally. So rally is a good thing in the markets. So you have this would be a bullish rally. So you have a lot of bullish, a lot of buying pressure going up the way, but it's quickly just negated by a huge bearish candle. This bearish candle would be a good indication that the market is going to retest, or is going to come back down, and this could be meeting what you could compare it to is a strong level of support or resistance at this point. If you saw this approaching resistance and you see a big red bullet or bearish engulfing candle, it's a good indication. It has to fit into a full big straight trading strategy. So when it comes to the markets, and there's, say, a big news comes out, and it's say resistance level is here, and people have their limits up here ready to get in and short say euro dollar, which is what we're looking at here. But the resistance is there, and people have their sell limits. It's a short order in on the market here, but the price is on its way up. But big market news comes out. Big market news. Say take it from a stock point of view. We're trading Tesla here, right? TSLA, that's the ticker for Tesla. If you were here last week, I covered all this kind of stuff in a more general sense. But say you're trading Tesla, and we're heading for that resistance. Say that's the $900 level, and price is heading for it. We're at 875, and we're heading for that level. But big news comes out: Elon Musk resigns. Typically, when a CEO resigns or the likes, well, it will definitely affect the market in some way or another. If there were a good CEO, you could see a really, really big dip. If it wasn't a good CEO and their successor might be good, they might blow price up. But you are going to have a reaction at this point. You could see it go, and it could be steady going along, and then just straight up like that, or you could have just the gradual growth of a stock, or you could just see this big sharp decline. And typically, another little pointer for the markets as well, prices usually go up slower than they'll go down. So like, if you think about it from the perspective of a ball, say it's going to take a lot more to send a ball up straight in a line than it will be for it to come straight back down. So like, if you look at the markets here, right, so I won't do it in black because you will not be able to see that. So if I do it in a more vibrant color. So you see the market here. There's a fair, like, if you take the trend of that, like, you're talking, fairly consistent growth over that year, call it, right, that 2 years. But price fell a lot faster than it grew. In a third of the time it fell. So like, there's your time period, just divided in 3. In the third of the time it took to get to that point from here, it fell in a quarter or a third of the time. So there's a lot you can kind of benefit from in that, because when we say we're going long, we're in it for a longer period of time. typically. That's the reason we call it long. And when we short, we're in it for a shorter period of time. And you can see here, it's true to the tail again, because price got to this point. From here, it took a considerable amount of time, but dropped in, say 1, 2, 3 months, and it was back down to the level it was when it took off. But it took 1, 2, 3, 4, 5, 6, 7, say call it 30 months to get to this point, but it fell in 3. So we can benefit from this because we know when we're if we short, we're going to be in it for a short amount of time. And if you think about it as well, if you short, so if here's 0 and here's infinity, right? On a chart. So here's a chart. And the price is going around. So the price is like that and whatever. And we see this trading opportunity. We see a bullish or bearish engulfing candle at this point, and we're kind of coming to say we have the resistance coming along here. We get a bearish engulfing right here, and we're saying, yeah, no, this is time to get into the trade. So we're going in for a long-term trade, maybe a couple of weeks. And price is coming down. 2 weeks later, we're at this level. We're thinking, yeah, this is going pretty good. And then it retraces up a little bit, comes back down to this kind of level. And then we see the price just rocket. Well, like, as I said, price can shoot straight. But typically, like you can see here, it shot up very, very quickly. Here, it shot up very, very quickly. Here, it shot up quickly enough. Whatever. But what can happen is you are limited by how much you can make when you go short. You can make as much as it takes until it gets 0, until the stock goes bankrupt. But you can lose infinitely. You can lose infinitely when you go short. And the reason we go in short is because it's you don't want to be taking too much risk in your trade, because you can lose infinite amounts of money, but you're limited by how much you can make. But it's the inverse when we go long. We have infinite amounts we can make, but we're limited by 0 in the losses. So it's I would say across the board, never take a trade without actually knowing exactly. You are going to obviously have to take a certain amount of risk. I'm just going to take a drink. You are going to there's always a certain amount of risk in the trade. But you're going to limit that amount of loss, the amount you can actually lose, by setting a stop loss. And you set a stop loss on any trade you take ever. There's people that are pure advocates of no stop loss, right? Because often what could happen is you take a trade and the price. Okay, we'll clear off the screen. We'll take a we'll see if we can find an example maybe, right? I know I don't like cherry picking. I really don't like hindsight analysis. Here might be a great example, right? So if we go and we take the screenshot again, this is very, very, very important information. So I would actually advise maybe to have a piece of paper or a small notebook with you to actually maybe document a few things. But right here, there is a key piece of knowledge that you need to understand. So banks know this is a key level of support. And they have all their orders in here, right, to go and buy. But what they know as well is all the retail traders like you and me, all are ready to get in here. And we're going to set our stop losses here, because that's the previous low of the most remember I was talking about recency and relevancy. You're going to take a recent low when you go for a stop loss, and you're going to use, some people use the ATR indicator. So actually we'll open up the ATR indicator on the chart. So ATR, the average true range, which basically tells us the average price range over the last so many candles. We have this set up for 14 candles. So 14 periods from this point, it would suggest that we do a 0.05 stop, as well as whatever you're putting for your stop. So you're going to go 0.05, so you're going to go 50 pips below what you would have thought would be your stop loss, which would be quite extreme in my opinion, for a stop loss. I don't typically use the ATR indicator, and if you actually go to the Patreon and get involved in all that thing, you will get any of my strategies. So I use Bollinger Band strategies as well as ATR and RSI strategies, and I have those set up in a very, very particular way that works, and I've tried and tested these strategies for like I'm running the Bollinger Band strategy since I was with the last couple, at least 2 years, and it's consistently making profits. It's obviously going to make losses because any strategy is not completely future. You will constantly, if you watch the video, you would have heard me talking about this. You will constantly have to revise your strategies, because a strategy that worked for me 6 months ago, say take my Bollinger Band strategy, right? That's a mean reverting strategy. So basically, Bollinger Band, basically, if we take back up that chart again. So when it comes to a Bollinger Band strategy, what you're going to have is a mean line going along, right? This technically won't be there. So like I could actually predict the way this would look is there'd be the Bollinger Band would be coming down like this, and it'd be going along, and price would be hitting it and going through it and coming back to it and whatever. But then you're going to have another line going along on the outside, right? So price comes down, it hits the band, you buy. This is the basics. You don't formulate a strategy just based off of this. I will help you develop a strategy if you get involved with the Patreon. I'll help you develop your strategies and get yourselves to a point where you can actually come up with a strategy like I have and all that, and you'll be able to formulate and get everything pinpoint accurate, get those. And I'll do a video especially on sniper entries. It's a kind of a phrase that's thrown around on YouTube. I know there's the Swag Academy, they talk about it a good bit, and basically what it means is you getting in at the best possible time, at the best possible point in time. So it's basically, I'll just give you a quick example of what I actually mean by a sniper entry, just intermittently, just to break up that little bit of a thing. So I see here, right, straight away, pinging off support, right, set off a previous level. So actually I'll take off that ATR indicator because it's not the kind of thing I'm discussing here is involved in strategy, in kind of support and resistance type strategies. And support and resistance, obviously, definitely, I could say every single strategy I actually apply to trading involves support and resistance. I don't think any strategy can actually survive without support and resistance. And so basically, okay, I'll just explain the sniper-like strategy, or the sniper-like entry, just before I actually go any further. So what you see here is price came down, and we see this key support level, right? We've set this up off previous price action. So price came down to this level before and rejected, or price came up to it and broke through it, that was set from previous or whatever. So we see the price approaching this level. We're thinking to ourselves, okay, right, it's coming to the level, so we're going to either break through and we're going to continue to the downside. So this could have easily gone, it could have easily just broken down through here, or it could have done what it did and reverse up off it. But how do we get in? We don't see anything straight away. This is the 4-hour chart. This is quite a swing tradey kind of a chart. I'd use a 4-hour typically for most of my swing trades. So my swing trades could be anything from anything that's not in the morning, out in the evening, in the afternoon, out in the evening kind of strategy. This is the one, like in my day trading strategies, I'm in the morning, and no matter what's going on, I'm out by the evening. I take my profit in the evening. If it hasn't hit the target or whatever, I typically say leave it run to the take profit, and typically it would. But if it's not after getting there and it's going my way, it's part of my strategy, and you need to follow your strategy. If you're saying no, I leave it run through to it, you're not sticking to your strategy. You need to stick to your strategies religiously. So what's going on here is price came down, came to the support, but we're looking for candlesticks, right? But we know it's coming to this level. So right, first thing I do is I draw a box around where those candles are. So I'll actually draw it to the extreme of it, right? So one candle after and one candle before, so I know all the data in that box is all data, and I'd actually include all the wicks. I'd actually hold control and set it to the highs, the lows, and the extremes on either side, right? So when we have that done, I have it set in green. I typically put these in blue. So I use green to show a buy. So I put green for support, and I use red for resistance, because you typically sell off a resistance, and are you short off a resistance, and you buy off you go long off a support. So what I do then is I knock it down to the 1 hour, right? So now we find our blue box. So there's our blue box. So we go in and we have a look. We see what's going on the lower time frame. This is how you get a sniper entry. So as it's called, I don't really like calling them sniper entries, but that's the kind of way it's kind of explained. And if you see it thrown around, that's the kind of way you'd interpret it. So I'm looking here and I see price busted down through like a fairly average size wick, and then price is picking up a bit of a small little pin bar kind of thing forming here. But this right here, this isn't pre-analyzed or anything. And I know that this is kind of getting lectury, and it's less kind of pre-market analysis, and maybe if you're here for the pre-market analysis, there might be a little bit less of it. I know I'm marketing it as a pre-market analysis session, and I'll quickly go over a few little things because I have a few in my head for the coming week. But this is very, very important from a trading point of view, and there's no point in trading anything if you don't understand most of these things. But what we're going through here is this candle right here, this candle at 8 o'clock on the 4th of February, right? Back at the start of February, there was this candle here. And what that candle means, this is probably the most significant candlestick that there possibly is, right? Is the doji, right? The doji candle. And what a doji candle is it can either be blue, it can be green, red. Some people have their charts set up with blue and red. Some people have them set up with green and purple. I actually have a green and purple thing set up. Just when I'm sick of looking at green and red and black charts and whatever, I just like to change it up a little bit. It's personal preference really. But a doji candle is denoted with very, very little of a body, right? It's a very, very small body. It can be something like this. Very, very minimal. This is getting blurry for some reason. I don't really know why. But it's long wicks with a small body. And what I mean, what that tells me is there is huge indecision in the market. The buyers are fighting with the sellers, and it's basically like it's like two boxers in the ring, and both of them clout each other, and the two of them drop KO on the ground, right? It's like that. The buyers are fighting with the sellers, and nobody can really win, right? So what that's telling me is there's indecision, and I need to watch out, because with indecision, you don't know who's going to win. You're kind of confused. You don't really know. So in this instance, that doji is telling me there's weakness in the sellers, because we're coming out of a downtrend, right? A downtrend is signified by lower lows and lower highs, right? So when a market is downtrending, so you have so there's a high and there's a low, right? So that's a high, that's a low, right? It's not 4, it's a low. But this here, when the market retraces and breaks this level, that is now a lower high, and it broke that level. So now we know that wherever the price retraces and turns next is a lower low, because it's lower than the previous low. So price retraces here a small bit and then breaks. So when the price got to a level and it retraced back up, we know that's a lower low. Price came back up, and when we see it return, when we see it go down, this is in a basic term. There's ways of actually confirming this that I will go into in more in-depth things when I bring out the trend analysis. It's either that'll actually be part of the Patreon course, because it's a heavy topic, because I'll be really diving in deep with it. But this is going to be another lower high. So we have a high, a low, a lower high, a lower low, a lower high. So we have officially entered a downtrend. So this is not necessarily a downtrend. When we see the lower high, we're thinking this is a downtrend, and when this level breaks, it's a downtrend. We know it's a downtrend. Absolute downtrend. 100%. It's been confirmed to us. So now we're just waiting for that small retracement down. So now we have another lower low, another lower high, and then this could blow right back up to here. That makes another high, not a lower high, because it's actually not lower than that high, but this can come back down and break this, making this lower low, and then we can come back down further and have another lower low. I did go through this in last week's video as well, and if you missed that, I didn't record it, nor have I recorded this one, but they're kind of live for a reason. You kind of miss out if you miss out, and whatever. It's your own loss. And that's a brutal way of saying it, but you're really, like, you know, they like, I'm sure you're sitting there now, some things mightn't be making a huge amount of sense, but if you keep tuning into these videos or these live streams, I'd be more than happy to keep them coming, because I actually really enjoy and the whole thing of X91Investing is to teach people how to trade. So back to the idea of the doji. The doji shows indecision in the market, and when there's indecision coming from either a downtrend or an uptrend, take it that we're coming from the downtrend, there's indecision, the sellers are losing power. We see this, it popped through, but it came back up. We see a doji, we're thinking this is going our way, right? Or this is going the way we're thinking this could be a reversal, because it came through, popped back up, but then we see it pulling back down, hitting the same kind of levels. This is on an hourly chart. So this is, you know, this was, say, 8 o'clock in the evening, 7 o'clock, 6 o'clock, 5 o'clock, 4 o'clock, the whole way back. So we're at 8 o'clock in the evening, we're coming out of the Euro USD kind of time. You know, you're coming into aftermarket hours of the New York session. So we're thinking, okay, this could be something to be looking out for. We see this big bearish engulfing candle, right? This big, like, we can't actually see the color of this. Well, when you actually look at the chart and whatever, you'll see that this is obviously a red candle. This would have been a green candle. So this candle pushing right down to this level, this would have dummied a lot of people. And remember I was saying about the banks? That was actually the original idea of what I was talking about. If we go back to the 4 hour, where we would have had our stop loss set for that. Where is it? So back here, when we were looking, was it back on the monthly chart actually, where we were talking about the banks? I kind of just jumped from topic to topic, I think, a good bit. But right, we go to the 4 hour. I think it was actually at that level that we were looking at, where we could have seen some bank. No, was it here? Yeah, it was here. It's back here. So we'll just zoom in on this so we can actually. So I'm not going to go off this topic, because this is one of the more important bits of information. So what we have here is the banks would have gotten in about here, right? Just at this level where I have the cross, there's the brush. So there's where the banks would have gotten in. But the banks are buying huge amounts of currency, and they're buying large volumes of stocks, cryptos. They're buying it in large volumes, and if they don't have the orders against them to fill the orders that they want, they're not going to get their fill. They put in an order for 10,000 shares of a stock, and there's only 5,000 there's only 5,000 people willing to sell for that kind of price. The bank isn't going to fill all the orders that they want, so they're not going to benefit in the way that they actually want it. So what they do is, when the banks place their order, what they do is they force the market. They have such a heavy weight in the market. They're actually able to force the market down, not completely change the trajectory, but they're able to force it down low enough that it actually triggers all the people that are in the market with their stop losses. So all the people that were here at this level, ready to actually to actually get into trades, that they were thinking that the market was going to go bullish, like break the resistance. So like we had a break. So what a live trader or a retail trader would have seen here was a break of support, a break of resistance, turned support. They were expecting a retest, but they saw it break through. So people would have been pulling out. They see it breaking back down through. They might have been seeing this as a reversal. So they all say, oh no, sell, 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 sell. The banks are picking up their orders. And when the banks pick up their orders, a huge amount of buying pressure builds up. And then the market shoots in the direction you wanted it to. But you pulled out of the trade because you thought the bank was, well, you don't know. The retail, the average Joe that doesn't know what he's at in the markets, that hops in, doesn't actually understand that the banks are actually there to sweep out the stop losses, to pick up their trades. And basically what a stop loss does is it executes, you want to sell your product, you sell your product instantly. And that's, the bank has so many orders there at that level, they're going to be filled straight away with all the stop losses as soon as they're actually triggered. So the bank is there and it swoops your stop loss away. You're out of the trade and it goes in the direction, like there's a couple, like there's a lot, like say you got in here, you would have had up to this high, say, it's actually in the way, the OHLC is in the way. So if we go to the measure tool again, we measure from here to here, there's 209 pips. That is an absolute ridiculous amount of profit in 209 pips. Fair enough, this is a good, it actually measured it there for me with the measuring tool. Like there's a ridiculous amount of pips in 18 4-hour blocks. So like that's only a couple of days. There's not like that's a fairly long term. That's a kind of it's a small swing trade at the, you know, when you really strip it back. But we'll go back to this this price point here, and we noticed that it was coming down, and we were we seen that this is acting as support. So we're thinking this could go bullish again after coming down to this. So we're looking at this on the hour, and how to get your sniper entry is you look for the doji. So you find the doji, not necessarily a doji. There's loads of candlesticks. I'll be going over all this on the Patreon again. Just to plug that, because that's where all the real value. Like there's going to be a lot of value in these. These are going to be kind of more for the give a man a fish type thinking. So like give a man a fish, you feed him for a day. Teach a man how to fish, and you feed him for life. So the Patreon is more teach the man how to fish. This is more giving the man the fish. Like I'll be getting into, so we're actually running towards the end of the stream here. So okay, I don't know how long ago, sorry Dominic, that you were you're saying that you're fairly bullish on AMC, so we might actually we'll give AMC a look just before. And if anyone else wants to pop a message, I'm sorry, I actually wasn't looking at the chat for the whole thing. It could have been going absolutely mental now, to be honest, but you know, we have messaging from Dominic just to say hello. I have a diamond hands on AMC. I interpret that as that you're kind of bullish on it, so we'll actually have a look at that. If anyone else, I see there's 3 in the stream at the moment, so if you have anything that you want to have a look at, I'll look at meme stocks if you want me to have a look at. I know AMC, it's technically a kind of a meme stock. I actually have been AMC has been part of my portfolio for a while, and I actually picked up on a nice little bit of that Wall Street Bets surge that came as well. So yeah, if you want to, I'll have a little quick look at Dogecoin if you want as well. I don't really like I had 5% of my account I had it reserved for Dogecoin, but I actually never went in on Betfinance and actually went in and executed a buy or whatever on the stock, on the crypto. So like I'm real Ripple, Bitcoin, EOS, Litecoin, any of the real kind of the main ones. You'll see them in here if I just go into the I've started this new naming system in here, and that's commodities, cryptos. So these are the main ones I look at: Bitcoin, Bitcash, Ripple, EOS, Ethereum, Litecoin. And I have Doge there because I've been just keeping an eye on it, like minus 5% for today. We're starting to hit that, like it's after pulling back again today. But right, I keep getting sidetracked, and I really apologize. I see 4 people in now, so I think maybe we might have to look at something maybe for the in terms of the link. If you have any suggestions for me on how to actually get the word out about the stream, I see 5 people now, so there's people obviously might have had a little bit of trouble getting in on the link or whatever for this week. So I know with the Zoom last week we had 7 people, but 7 was the total participants. So we would have had 6 excluding me, but we have 5 people viewing at the moment. So we might put it on. We'll go until 8 o'clock just to give the few that are just after coming in. Maybe they had a little bit of trouble getting in. We'll give them the benefit of the doubt. It sounds awful, but we'll give them the opportunity to get a little bit of value out of this. So basically, what for anyone that's just after joining, we were looking at a bit of a sniper entry on the Euro US dollar from the start of February. So I know we're just about to start into March, so this is days and days and days of price action. But we're just looking at this point here. For anyone that's just after joining as well, I'm pretty much against backtest, or not back. I'm all for backtesting, but hindsight trading. So hopping in onto a chart, there's one individual in particular. For defamation reasons and illegalities, I can't actually say anything name wise about this other content creator, but they put out a lot of content that is a bit kind of shady from the point of view of not shady isn't a great way of putting it, but there is it's kind of where I got my first kind of introduction into Forex and all that kind of stuff. So the stuff they teach isn't in my experience hasn't been the most effective way of doing things. We'll put it that way. It's a lot of indecisive explanations. They don't fully understand what's going on and the like. But so basically, we go back to this with the sniper entry. We're basically looking here at this level of support. So with the level of support we have here, we're looking at price coming down. It's been a little bit indecisive. It pulled down, but we're looking at this kind of level here. We see this pullback. We're not getting in. We're not after being given our entry signal yet. So what we're looking at here is we see the doji just at the 8 o'clock candle on the 4th of February. We're kind of thinking to ourselves, okay, we could be looking at an uptrend here. Some people on a loose type strategy would be after. So on TradingView, great thing about TradingView, you can use this tool. So it's a long. There's one for long trades. There's one for short trades. So you can do your red and your green for your long and short. So in my opinion, you'd be mad getting in. Say if you were getting in there on a loose strategy, it might work. Well, you would be, on a looser strategy, you would be getting in there. And what you'd be doing is you'd be setting your stop loss based off of previous support and or previous low levels and whatever. So you might be setting it there, but what happened? Straight away, your trade is getting stopped out. So if we put that in on that candle, actually, it's not actually picking up the trade. The info. I'm trying to get it to show there's a little arrow that pops up on this when the actual price gets to a level where where the price, whether you would have lost the trade or whether you have won the trade. So I wouldn't personally have, on a looser strategy, you might have gotten in there. And I hope my microphone and whatever isn't actually too loud. It's a little bit, I'm still only getting to grips with things with regard to the whole streaming and live and all that kind of stuff. Because in post-processing, I can go in and edit a video and make it quieter and whatever. It's much easier to do then. But when it comes to live, I could be screaming down and you might be, struggling to lose your minds. But for me, looking at this, doing my little bit of analysis here, we'll actually turn the colours on, because to the untrained eye it mightn't actually be as easy to see with the black chart. So what we're looking at here is the price was here with the doji. We had the bearish little engulfing here, so this might have tricked a lot of people into thinking this could be a bearish run. But price started to pick up. This technically wouldn't be anything engulfing, anything like that, but we see the little bit of seller pressure being lost here. But then when the price takes off like this to the upside away from a support, I personally would have jumped in here. no, like some people on YouTube might say, oh, I was here and I was like, okay, and this and this and this, and I got in here, and my stop loss was here, because they're looking at what's actually there. They're using hindsight analysis because they know what's after. Like they know the way the trade went, and they know that the price didn't go up, pull back below here, and then go up again, because that can easily happen, and that's how the banks actually fill their orders, by actually forcing the market down by putting in a big massive order that pounds the market below, pulls all those stop losses, and actually pulls back up to the upside. So what someone else might say is, yeah, I put my stop loss in here, but at this low, at this low here. Or they might go again. They might say, yeah, no, I actually didn't put a stop loss in at all because I was so confident in this trade. But you can't. It's impossible to trade without a stop loss, in my opinion. There's no trade can be taken without you limiting your loss, because you can lose. Price moving from, say I said I got in, say there, right. Looking at it, I would have been looking at this level here, pretty much like the other trader, one with the more loose strategy, would have been getting in about here, or putting their stop loss about here, which would have been like automatically. Well, obviously I would have targeted around, say, off of previous levels. I would have probably targeted a little bit below this previous one, because you see there's a little bit of, like, every time you're kind of you're pulling back. So this is the ray tool, so you're able to it doesn't go back in history, it only goes up to the bar on the right hand side. So, like, I'm kind of thinking, see, like, this level here and this level here aren't the same level, and there was a little bit of loss in strength from when it came up to here and retraced back down. It broke a little bit lower as well. You need to watch out for that as well. It actually broke lower, and you can see that it's actually kind of channeling, whereas the rotated rectangle, it's actually channeling a little bit to the downside. It's not a perfect rectangle now by any stretch, but you can see here that this rectangle, this trading channel, is heading for the downside. So I don't actually like using that tool. I just use the trend line tool to show trend. But we can see here that this was actually losing strength, bullish strength. So I'm kind of thinking to myself, this could be another retracement to that kind of level, but I'd actually put it a little bit lower, because that kind of thing of it's actually trending down the way. And I know it did break through the channel here, so there could have been the fact it was a downtrend. Typically you wouldn't trade against the trend. It wouldn't be it wouldn't actually be advised to trade against the trend. So people might have gotten in for a short. They might have shorted here and stayed in the trade. And typically when someone shorts, they be, it's kind of hard when you're like, you wouldn't set your stop loss all the way up there, because then you have a risk to reward trade. You would have been aiming for this support level for your and you only have a 1.7 hour trade. You don't take a 0.7 hour trade, because there's no reward in it for it. There's too much risk for the amount of reward you're going to get. I'd take trades with no less than 2 hour, 1.8 hour maybe, definitely no more than that, or no less than that. My trades would have to be considerably more in my favour to actually be fully confident in them. So I'm looking here at a trade here. If I was taken, I would have aimed for just shy of these levels. So maybe say, if we actually get the ruler and measure the distance between those two bars, so we're talking 7 pips between those two bars, not a huge amount. So maybe if we go to there, so 58, and we put it back to about 50, say call it 52, so we're aiming for just, actually I would have actually put it a little bit closer to that line. So that would have been my trade, and that's not me hindsight trading. I'm giving my kind of input from how I would have actually traded at the time, rather than trying to impress and all that kind of stuff that other channels would be doing. And bear in mind, by watching those channels that are based in America, where you say, oh, grow a $100 account into a $5,000 account in a couple of days, or in a week, or a couple of weeks, It's much harder to do that in Ireland for the simple reason that we operate with a legal limit of 1:30 leverage in Ireland, which basically means €1 is equal to €30 with the leverage. So you can leverage a trade with $1 or €1 in your account, and you can leverage that up to €30. €100 is $3,000. €1,000 is 30 grand, and so on, right? So you can leverage your account to a certain amount, but in America they have 1:500 leverage. So they can have a $1 account and trade with $500, whereas for us to trade, we would have to have considerably more in the account to be able to trade what they can trade with very, very little. So that's how they're able to trade up a $100 account to a couple of thousand in a short, and that's extremely risky trading now, by the way. Trading a small account to a big account, that exponentially is ridiculously risky. Personally, I've never blown an account because I'm so strict in my trading analysis and my execution of trades and my money management and my risk analysis and my risk management. And I have, in recent times, I've gotten really, really good at suppressing emotions when taking trades. Like what I said, when it comes into trading, the whole thing of trading psychology, people getting into trades here when price touches the resistance, they have their stop loss set at a certain level, and they have their take profit at the most recent high, and so that's their trade. But they've set their stop loss just below the previous, say there was previous candles, just over here. Say there was a previous low after wicking down to here, and they were after setting their stop loss based off of that previous low. But the bank comes in, swoops all their orders, all their stop losses, and blows up to the side that they said they were going to go. So having your stop losses too tight will definitely put you in the wrong in a trade. So you need to think the way the banks are thinking, is basically my point when it comes to that. You need to put a stop loss in place, but don't put it so close that the banks are just going to swoop you out of your trade. You need to calculate your position size based off of your amount of risk. And if you're risking 2%, you're going to have your stop loss is going to be a distance away. So you're going to, like, a lot of people determine their lot size. So say they're trading trading a micro lot, or say a mini lot, right? 0.1 lots. So with a mini lot, you're trading with $10,000 worth of currency, and that's what you trade, and you're setting your stop loss based off of that. You are going to be really inconsistent with the amount that you're going to make and lose when making a trade, and your stop loss isn't going to be consistent with the amount of money that you're going to lose every time. You're going to be losing an extra euro, maybe an extra €10, maybe a little less sometimes. So you need to determine your stop loss. So you determine that your stop loss is going to be here. End of story. No two ways about it. That is your stop loss. You get the distance between that and that, or as a percentage. So if you're willing to lose 2%, so you take that, and there's a formula to it. I'll actually put it. Where would I? I would put it as part of I'd put a post on Patreon. I'll put a post on Patreon. I'd do it up, and I'd do a few examples. It'll be on the Patreon. So basically, you'll be able to actually calculate how much currency you want to buy based off of where your stop loss is, rather than basing your stop loss off the amount of currency you want to buy. And then you set your take profit where you think the price is going to go. You're not going to set your take profit. You're not going to enter the trade. Say enter the trade where I did. I'm going to put my stop loss below the previous lows, because it's going to be hard for price to come back down here and swoop. The banks aren't thinking that there's more people here. They're after stopping everyone out that was here. So they're going to be like, yeah, no, this is a break. This is actually a bearish. That's a short order. So I would be getting in off of the next candle after the bullish engulfing candle, whereas other lads on YouTube would be telling you, I got in here. But why did you get in there? There's no reason to get in there. So you're coming back up to the support. It's acting as resistance. Now, why would you buy in there? That's what they're telling you. They're telling you, oh, I made 209 pips But why did you enter the trade? You're not telling me why you entered. I'm telling you I entered here because I entered after the bullish engulfing candle. Yes, it pulled back down, but it didn't pull. It came back down to where the resistance or the support was, and it blew back up to the upside. That's a very valid. That is a trade that I would have taken. With that, that's a fairly wide stop now, in all fairness. And as soon as that price started to take off, I would have brought stops to break even, which is a fairly commonplace strategy. Actually, first what I would have done is when the price actually initially took off, say here. So when I would have set it, I would have set it like this. So there's my 1:1 point. I know I said a couple of minutes ago that I wouldn't take a trade that was less than 1.8 R, and we're looking at 1.6 R here. So say that we set it just below them, we're talking 1.6, 1.7 R. Possibly based off my strategy, I actually wouldn't have taken this trade, as good as it looks, but that stop would have been a bit wide for me. But take it from the perspective of maybe a little bit of a looser strategy where I might have actually no, I actually would have taken this trade, because this would have you're going to have overrides in your trading strategies, and this might sound like I'm just trying to make things fit, but this is, if you get involved with the course and whatever, this stuff does get explained in much more detail. But this bullish engulfing would definitely sway me in the, like, there's no selling pressure on this whatsoever. This was a bull run to the upside. I'd say if we looked at this on the 15, actually go back to the 1 hour, and we'll actually highlight that candle, because we actually need to analyze that on a smaller time frame. So we're going to take that candle there, and we're going to go down to the 15 minute, because that'll show us 4 candles, and that will actually look like a big massive surge. I'd nearly guarantee it. So we're talking here. So we're going here. So look at that big massive bullish engulfing candle. So if I was taking that trade, I would have taken it because of the bullish engulfing candle. But other people will tell you they took it from down here, but there was no reason to. I would have taken the trade from there based off the bullish engulfing coming off of the support. I would have taken it purely because it's blowing up off of that support line there. And so then I would have been in that trade, heading up for this resistance line. And when the price came back down to here, and I saw it actually take off. So I'll actually delete that off the screen, and I'll zoom in so we can get a good look at it. So we can see this bearish candle here, but it was taken over not by an engulfing, but when you can actually consider a bullish engulfing when you see 2 green candlesticks. I'll just do a quick what's called a full screen snip, so we can actually get this on the screen in more of an explanatory way. So if I make this lovely and big, so we can see over here what happened was, when we have, say we'll draw the bears first. So we have a bearish candle, big. Okay, these are actually really interesting candles. These would have actually really fueled a good entry. So we have candles here that are showing buying pressure, that they lost buying pressure, and then we saw another one here coming down towards the support line, right? So this one had a small wick on it, this one had no wick on it whatsoever. So when this green candle came here, so there's the open, that's the open of a green candle, and it blew up 3/4 of the way up the wick, but there was this big thing here, right? So with the small wick on the top. So what this is screaming at me is sellers are losing. Sellers are getting slaughtered here, because what I'm seeing is the sellers had power, but when it got to that level, the sellers just couldn't. The buyers were just there, ready to absolutely just annihilate. And the next candle blew up past. And then the next candle is the real telltale candle, right? Because there's a big long, you can see here, there's a big long wick on the end of it. That shows that it came down, but the bulls just ripped through and just drove that price up. You can see this shows a lot of bullish pressure, this big candle. The sellers did come back in and push it back down, but the next candle is big strong body on the candle, small wicks. That's overwhelming amounts of actual strength in a particular hour. Like that's one single hour. Like this moved from here to here, which could be 70 pips. If that thing was 200 pips, that could be 110 pips. Let's call it 100 pips. Like that's a huge substantial move in the markets, and it's all shown with these beautiful candlesticks that are showing exactly what we want to see. This sellers losing pressure, they're losing their big massive the sellers are constantly trying to push that market down, but the buyers are just completely saying no, this is going up, we think this is worth more, we're buying this is going up. So the bears lost out in that instance, and the market just shot up to the upside, came up to that level. So what would we have thought that this is the last little bit I'm going to go into, and then we're going to get into a small bit of PMA. So the market came up to the levels, all well and good. So I would have had my take profit here, but the price went up through. So what? I made my profit. It got to the level I wanted. Plain and simple. No two ways about it. I got my profit. It didn't go the whole way up, but I decided that was where I wanted to take my profit. So who else cares? I'm happy. I'm green. I'm after, like, someone else is after losing out because someone's after buying it off me there when I sold. So price retraced back down. See, like, when we see it hit these levels, we don't get in for a buy. There's no, like, we're not getting an entry reason. This bearish engulfing candle here completely threw a lot of people off, I'd say, because, like, the end of this uptrend, people would have thought, okay, we're just going to double top here and we're just going to plummet back down to the downside. A lot of people would have actually shorted here because a double top is a reversal signal. So when a market, we'll just take one more full screen snip here, so we can see the market came up to a level. We'll actually get a different color just so it's really easy to see. We'll actually get that pink. That pink is actually a really, really strong color. So the market came up to a level, came down, didn't break. That's the key thing. It didn't break above, because that would have completely voided our reversal pattern. So the price came up, retraced, but didn't break, came down. It went a little bit, it consolidated. That's what that's called. When price, this is an uptrend, that's a downtrend. Well, that's actually technically not. That's an uptrend, that's a downtrend. And then when you have the market going along like that, so technically when you look at them, it's going to be like that. That's an uptrend, that's a downtrend. And consolidation is this, where the price isn't going up nor going down. It's not going up nor going down. And it's just moving sideways. It's a sideways channel. So you have an upward channel here, you have a downward channel here. So remember I was saying about we have the downward, there's kind of a downward channel coming here, not very strong, but it is on its way down. But we have consolidation here. The price consolidated. It kind of came down, went around, came up and broke through, came down. It's a little bit indecisive. So what we're looking at here is the price came up, and people would have seen that and would have been like, double top. Get in for a short, ride that right down to that previous level. We would have made another 200 pips and all happy days. But that's not enough to get in on a trade just because there's a bearish engulfing. No, we just, it's just after coming out of a really, really strong uptrend. Why would you just get in? Like, you don't just get in because you see something like that. There's loads of other parts to your strategy that you really need to apply. So you have this bearish engulfing candle here. That's signified me that there could be a downtrend happening. But I need more confirmation than that. It's after coming up to a level, and it's after coming down off it. But it needs to retest for me to actually think that that's going to happen. So technically what a double bottom is a retest of a level. Right? So what a lot of people would have seen there is a double top, reversal, get in, bearish engulfing, go down. But that would be to the average Joe in the market. And when you get better at analysing the markets and whatever, you will actually start to see these things, and you won't be calling these bearish engulfing candles, you won't be calling these bullish engulfing candles. You're going to be able to understand. It's more the understanding. If you know all the names of every single candlestick, That's not going to make you a better trader than me or any of the professional traders or any of the big traders on YouTube or whatever. By knowing the names and knowing, I know what a shooting star, a morning star, an evening star, doji, all these. I know them because that's the kind of way I went about learning them. And from a lecturing point of view, I need to kind of know the names of them, whatever. But from a practicality and from a trade, knowing the names of them means absolutely nothing if you don't know what it means. Like, I know a bearish engulfing candle means that there's a lot of selling pressure. The buyers have been completely overwhelmed by the sellers. So that's going to blow to the downside. Well, it's not going to. It is understood that there is less buying pressure than there is selling pressure. So when there's a way of thinking about it, a really common way of thinking about it is supply and demand. So if you have if there's 3 barrels of oil, and this is fairly basic now. If you have 3 barrels of oil, but there's only 2 people wants oil, right? There's more supply for the demand, so the price is going to go down. It's not worth as much. But if there's 1 barrel of oil and there's 3 people that want it, the price of that barrel of oil is going to shoot because there's so much demand for it. People will pay more for it. So what we're talking about here is the buyers, the sellers are there, and we're kind of entering what you call here a supply zone, right? What's happening here is the currency is in. There's a lot of it after been bought, but the supply, the fact that there's a load of people after selling and causing this candle here, there's a load of people after selling, so that there's more supply. So the price is starting to fall down. When you come out of an uptrend, there's going to be a lot more supply starting to gather because people are selling. There's a lot of people selling at the top of one of these when you come to resistance. So you're going to see a lot of supply start to accumulate. And what you're looking at here is the price retracing, right? It retraced into a supply zone, right? So basically what's happening is a hell of a lot of supply is starting to recuperate, and the banks are starting to pick up on their orders again. And that bears, I know this image is getting completely destroyed with me just scribbling, but the banks are seeing this, and they're seeing this supply zone start, and this is where they're getting in here to pick up all the orders that they need, because they know there's people after getting in for a sell here. So that's the reason it picked up here, right? They wanted to pick up all the people that were here. They drove the price up and caught their stop losses, and then they faked it to the downside. So they added a little bit more weight. The banks did, now, not the retail traders. They added a little bit of extra pressure, so the people started to buy back, or they started to sell. They started to sell because they were thinking that this is going to the downside now, because the banks are after doing, but the people aren't thinking this. But from the trader, that's what the trader's thinking. The banks are doing something sly here. We need to get in on this. So the prices that are coming down, the sellers are after been stopped out. So the people that are after shorting the trade, remember the thing here with the green is down here, and then the red is up here, and the line in the middle. So they're after stopping out all the shorts, and then all the shorts thinking that it's going to turn around because all the banks are after stopping them out. So now the price is returning. So a load of people are after they're selling here because they're scared. They're there and they don't have a clue what's going on. So they're selling. They're like, no, I don't want this. This is going completely not my way, because they're after losing money here. They're after losing money here. They just think they're going to lose more money here. So they're selling. They're getting out. They're filling all the bank's orders. And the smart traders like me and any of you that actually decide to go in on the course, you learn all these little tricks of the trade that the banks are doing, that are stopping out all the retail traders that are there. I can't make money in this. This is not working for me. These are the tricks that actually you need to learn. The way the banks operate, the banks need to accumulate huge amounts of volume to actually fill their orders. So the price will blow up to the upside then, because the banks are after filling all their orders. The bullish momentum takes hold, and it actually pushes to the upside. So that's where the market obviously went. Like, we could do this all day, and we could hindsight trade our lives away, like most of the online YouTube channels and whatever do. But I'm not about that. I really don't like the idea of hindsight trading. So right, we're gonna leave that kind of bit of lecture work behind, and we're gonna just do 5 or 10 minutes of a little bit of PMA now. So right, look, I know Dominic was on about AMC, so we'll put away the tablet now, and sorry about the mic, that's probably after blowing the ears off you. But right, we're gonna have a little quick look at we'll have a look at AMC. So Dominic wanted to have a look at AMC. He's bullish on AMC, so we'll have a look. We'll get in on it here. I have GME here. I don't think I have. No, was it? No, you don't have AMD. AMD is part of my portfolio at the moment as well. But right, we'll just go. We'll create a new list and we call it Sunday PMA boys. No, Sunday PMA. We'll just call it that, and we'll just put in AMC. We'll do the one on the New York Stock Exchange. So we'll have a look at that, right? So, so for this week, we'll knock it onto the 4 hour. We'll take off the extended hours. We'll have a look, right? We'll have a look. So this was the initial bust with GME, Nokia, BlackBerry, that big bust, the Wall Street bets bust. Obviously the markets are closed at the moment. They'll be open tomorrow, 2:30. So we'll be talking. So like there was, see, remember I was talking about the supply area. We had a nice big strong supply area in the last, say, 2-3 weeks. Watch out for this. I definitely say watch out for the earnings. I'm a little bit skeptical of these earnings myself, because if we go back and look at previous, we have actually been missing earnings fairly consistently over the last while. Like I think I've been holding AMC with the last 5 months. I think I've been holding AMC from mid-late 2020, around, I think it was around October, in this dip. I picked up in this dip, I remember that. Just back in this dip on the daily chart, it'll show it a little bit more considerably. So back here, I think I picked it up. I actually think it was the 15th of October when I picked it up, just before my birthday, just about a week before my birthday. I picked it up. So basically, I've been holding it for a good while. I picked it up around here. It did fall a little bit and it fell again, but this, like we were talking about, the double top, double bottom, right? That's what happened. You know, when it comes to technical analysis, you're gonna pick up on a lot of these things over time. So basically, we had a double bottom. I was in from this dip here. So I bought in the dip. There was a little bit of a stock market dip back in, not across the board, but in a couple of the tech companies. There was a dip in Tesla. I caught up a nice few bits of Tesla stock there, and so we were rocking around here. But this was obviously the Wall Street bets thing, completely ridiculous. But right, so my sentiment on it for this week is we really need to be a little bit skeptical. Like, this week is going to be, we're going to have earnings. So earnings are coming out the 4th. The 4th is Thursday, right? So we're going to have earnings at market open. It's estimated to fall, and my kind of consensus on this would be due to the Wall Street thing. The predicted earnings are going to miss, and I would nearly agree with that, because they'd be a little bit skeptical of price based off of the Wall Street bets shenanigans, right? So I wouldn't say pull your trade if Dominic, you have it. If you have, I'm not going to personally pull from AMC at the moment. It's in my portfolio with a while. I did sell a considerable amount of my shares when the Wall Street bets explosion happened. It was, I think it was around here. I definitely didn't get the full max out of this, but I think it was in around 16-17 euro, in around that range, in around there, was when I actually sold. I think I sold I think I sold probably 40-60% of what I held, and I'm still holding about 20 I think it's 24 shares at the moment. So I still hold, I still have a few at the moment, and I'm just holding them because we might get back up to these kind of levels again soon. Like this one here, up around the tenner. I'd be looking personally. I'm thinking about 15, and I have none of my actual technical analysis on, because we remember at the start of the stream we put on the Sunday PMA chart layout. So this is the one. I'm gonna leave that alone every Sunday. We'll just apply that chart layout. All my charts can be sometimes messy with notes and whatever. So yeah, that's my kind of sentiment on AMC. I wouldn't say drop it just yet. Keep an eye. I'm very, with these kind of stocks, I'd be a little bit longer. I'm actually holding if we go back into the major stocks, AMD. I've been holding AMD for a shite load of time as well. Way back, I think it was back, just after the COVID drop, I picked up a little bit here in the supply zone. And sure, look where we are now. Like savage amounts of profit. I bought at 50 euro at a limit set. Picked up no time though. I only bought, I think it was 16 shares, and I wasn't super bullish, but like, so I have a nice portfolio built now off of AMD. So like, I'll give you another few little things. Watch out for COS, because COS is if you were looking at my Instagram, so what would you say about all the puts expiring at $8 tomorrow for AMC? So I'm kind of like, when it comes to AMC, you said AMC. So with AMC, I think there will be a bit of a dip tomorrow, right? With the likes of that, with the earnings, I'm fairly sure we are going to undershoot earnings, like it is predicted. So we could see a dip, like it could. It's being completely honest, I'm fairly sure it's going to pull back, but I don't think it's enough for me to actually fully liquidate what I have, to be honest, because I'm still kind of feeling it for them, because they're like, the Wall Street could, like, I'm not involved in Wall Street bets or whatever, but I'm not completely against it at the same time. Like, I don't like the whole thing of bullying the stock market, bullying hedge funds and all that. Like, I really think it's a it's a game that people are kind of coming into that are really kind of pussyfooting around in, and they don't really know what they're at, and they're really, screwing things over for a lot of people that have been investing in this whole thing with a long time. But in terms of puts expiring, typically you could see a little bit. It's not a long term kind of bull run, but bearish kind of fall off. But I'd say just stay vigilant. Don't have your finger on the trigger, but just definitely have a bit of a kind of skepticality towards it. But what I was saying was, keep your eye on COS, right? COS Corp. They make headphones, kind of audio devices. They react very, very much like GMC or GME. Like, if I show you the chart here, like, that's the Wall Street bets explosion, and it's the hidden. They don't talk about it. Like, this wasn't covered news wise. This blew up because I think they actually supply their supplier for another one of the. You see, when things blow up like that, you can see a lot of other companies that could be paired with those companies as suppliers or as kind of loyal customers and whatever of those companies, and this crowd just blew up, and it wasn't covered. No one was talking about it, and I've been watching it lately because it actually does lag behind GME quite a bit, actually, because if we look at the GME chart here just before we wrap up things, see, like, GME is starting to actually kind of pick up a little bit, but at the same time COS is still pushing down. So like we could see costs starting to pick up, and it could be a time to maybe, I wouldn't be in this long term, I wouldn't be in cost long term. They're not like, they're, what's the market cap on, like 127 million. They don't have a huge market capitalization compared to GME. Like it's these lads, they're lagging behind a little bit in terms of if you were trading them in pairs, so you could catch in on this lad. Zoom, I'm a little bit hesitant on Zoom. It's cheap. Is this, no, that's not Zoom. Where are we now? Zoom, sorry, here's Zoom. Yeah, it's Medica. That was another what you call it. Yeah, what, I was completely thrown off there. So Zoom, here's Zoom. So obviously with the whole thing with the pandemic, loads more people are what you call it, using Zoom. The whole thing of online learning, the whole lot. Like if you look at Zoom 12 months ago, like there's Zoom 12 months ago before COVID. Huge thing. If, to be honest, if you were involved with the markets and you didn't pick up Zoom at the start of the pandemic, when people started actually talking about it, like come to Ireland, just around here, like when the pandemic just started, that's when I picked up a bit of Zoom for the portfolio. It blew up to the upside, completely just skyrocketed through, and it's holding. Like we're kind of, like this level is holding here strong. In since schools went back and the whole lot, here in Ireland specifically, I'm kind of basing it off of Irish. You could see this falling off with a lot of the we saw the riots in Dublin. Like we're seeing a lower high here. Like I'm getting a little bit less bullish on Zoom lately because of the way the world is actually starting to kind of return to a normal. But getting there, not necessarily like, in terms of college, we're all going to be still online into the future. For this term anyway. So yeah, look lads, this is running over a good bit. So look, we're gonna call this as it is for the moment. Sure, look, tune in next Sunday at 7 p.m. if you know anyone that would like to get involved, either with the Patreon or get on the Zoom calls. The more people that get on, the merrier. The more people get on, the more people get the information, and we can actually establish a nice little community together. We can all, so like, when I'll just give a quick, just really brief rundown of the Patreon. So when it comes to the Patreon, you need so basically we have one tier, we have two tiers, right? There's a coffee tier that's just a little way of saying thanks for all this kind of free stuff, the likes of the live stream here, the content on Instagram. Definitely follow the Instagram. I put up trading sentiment daily on that, inspirational quotes and the likes. If you then, so for the coffee, that's just thanking me for the coffee, thanking me for the kind of free content. Then we have the first tier on Patreon, which is it'll sound a little bit scary at first, but what I'm providing here is something that I wish I had when I started off, right? Everything on the internet is all thrown all over the place. There's no, like, especially there's no one relatable for me, like as in either being Irish or young. There's young people, but they're all like American and they follow different rules. But I'll actually show you how to be able to do this in Ireland with actually quite a limited amount of money as well. So like, when I started off, I didn't have a huge amount of money to actually put into a trading account, and the thing about trading is you just keep compounding that account, and I treat it like a business. I pay myself a little dividend every quarter and whatever. I just treat it like a little business. And what I'm trying to do here is provide something that I wish I had when I actually started trading, because it was so hard for me, like I said, with American people dealing with 500 times leverage, which is absolutely ridiculous. If I had the choice, I wouldn't even use 500 times leverage, in all honesty. So for €25 a month, so which works out at about €6, $6.25 a week, which is like, you'd waste that in a shop in one. You buy a chicken roll and a can of Coke, and that's that money. But you can invest what you would have spent on that chicken roll and a can of Coke into this, teach yourself how to trade, and you can have unlimited chicken rolls and cans of Coke. Like, if you think about it like that, it's like things like You buy a pair of Nike runners, €100, 150, €200. You can buy a couple of Nike stock for that. Like if you look at Nike here, I even have it, 134. So 200, €250. Do you know, 260, 265. Take it literally. You can have two Nike stock, one Nike stock. If you're bullish on Nike, right? Open up the Nike chart. So like we can even see in recent times, look, in late 2020, early 2021, we've been very, very uptrendy, bullish. Like, instead of buying that pair of Nike runners, invest in Nike. That could make you a couple of pairs of Nike runners. And that's what this whole thing is about. Like, teaching the man how to fish rather than giving him the fish. Because it's easy just go into the shop and, like, fair enough, look, having a nice pair of runners is nice. But having 5 or 6 pairs of them there, and you only have one pair of feet. Like, you don't need, you could be investing that money and making more money with money. And that's the kind of motto I kind of follow. Use money to make more money. Because having money sitting in a bank account for 12 months, making a couple of euro, like, like if I had, say, take it, I open a trading account tomorrow, €500, put €500 into a trading account, for example. Like, a day of trading, I could be after making, you could make 2 or 3% on that in a day with fairly good risk management and whatever. 2 or 3, maybe 4 trades, you could actually have that €530, €550 with the right strategy in place. Like, and then the next day you can go ahead with that take €550 as an example. You now have 550 rather than 500. So now that 550 might turn into 590. It doesn't happen that quickly, and exactly, like, you might have one day where you get 50 and the next day you might lose a tenner overall, but then the next day you make another 40, next day you make 20, next day you lose €30. That's the way trading works. Sometimes you have to take a step forward, half a step back, 2 steps forward, a step back to actually move forward, and that's the way the whole markets works, in all honesty. So look, lads, we're going to wrap that up for today. As I said, so that's just to recap on the Patreon thing. There's a €25 tier for the month, $6.50 or $6.25 for the week, which I think is absolute killer value. It's ridiculous. Like, I wanted to provide something for the younger traders, where you kind of want to have a small trading account as well as follow the like on the 25 quid. Just look it up. I'd be the Ultimate Trading and Investing course, a lecture every week going up on that. You'll have access to the Discord and the whole lot. It's infinite value in it, in my opinion. If that was there for me when I started, I would have, like, to be honest, it's like, and I'm not saying that from a marketing for myself point of view, that is ridiculous. Check around, compared to any competitors, there's nobody given that kind of value. And when this takes off, there's going to be, like, well, if it does take off, which I really, really hope it does, there will be a lot of young profitable traders out there, provided they're following the steps that I set out for them. So look, and then there's the next tier up, which is €50 a month, which is roughly, I think it's €12 a week, which is stretching the budget a little bit more, but you're getting one-on-one time with me. You can sit down, like, at the moment, there's 2 people sitting here in front of me. We had 5 at one stage. Like, you getting a one-on-one chat, one-on-one Zoom call. You show me your trading records, and I say to you, okay, well, let's see how we can improve that. And we'll devise a trading strategy together. Get something that really works, and I'll help you. I'll compare my strategies, and we'll get something working together, and we'll have something that, in the end of it, that will actually be profitable ultimately. And then you'll really realise, and initially I thought this whole trading and investing was a big scam. I just thought it didn't work. When I started off, I was consistently losing money, and I just didn't think it was I thought it was a scam. But then, like, I started, like, doing courses. Like, I have, like, things like this. Like, I'm after doing a couple of stock trading courses, cryptocurrency courses. I've attended multiple webinars. I've watched hours of YouTube. It's ridiculous amounts of stuff. Like, I only have 2 of the certificates there, but I have, it's on Udemy. I do a lot of the courses, YouTube webinars with your man, not the pattern trader, the other lad, Mark Shawson is the pattern trader. He's done a lot for me when it comes to gold. Gold trades. I'll do a bit of gold trades. I'll probably do a lecture on gold on the Patreon as well. But yeah, look lads, we'll have to wrap this up. This is stretching on way past the due date, but if you are thinking about the Patreon, pop over there. Everything's set up. It's so yeah, I have a couple of things in the works at the moment from a lectures point of view for the course, so it might be a little bit behind if you want to wait until there's actually a little bit of content. Be my guest. If you want to really hop into a little, that there's actually a good bit of content there that you can, just tuck into. But I have a couple. I think I have 2 lectures. I'm getting through them. There's a good bit of editing goes into these kind of courses, a lot more than I actually initially thought compared to a YouTube video. Like there's PowerPoint presentations and drawn on the screen and everything, and enlarging and short, and there's loads of stuff that goes into it. And it's to be honest, I think it's going to be. I'd have to get a few people onto the courses before it'll actually be worth my while. But look, it's going to be a slog in the start. But look, thanks very much for actually joining me and sticking with me for this long. It's been an absolute pleasure teaching you and whatever. And look, I'll see you next week. Spread the word around. We'll try and break that 5. We had 6 people last week. We had 5 people this week. So we'll try and break that record of 6 people for next week. And hopefully by live session 4, we aim for 10 people. So look, we've if you've enjoyed, just subscribe down below. Leave a like, share the channel around, share the Instagram page and whatever. But look lads, thanks very much, and I'll see you again soon. All right, I'm just going to turn this over to the end screen again. It should show the live sessions on a Sunday thing again. And yeah lads, thanks very much for joining me, and look, I'll see you all again soon. All right.